My name is FAM Lingui. Hello learner, welcome to Manifested e-learning platform. My name is FAM Lingwiri, and today, ladies and gentlemen, we are discussing about the financial modeling and data analytics paper, December 2023 sitting. The focus is on question 23, and you are presented with the following information right on the left of your screen here. You'll be given the stock name, Z-Term Kenya Limited, Car Assemblers, Ujenzi Centum, Cement, Kilimo Bora, Nairobi All Share Index, and you've been given the ticker symbol right over here. You've also been provided with the portfolio compositions, and all of these total to 100%. And how you can be able to just quickly check is by scrolling down over here, and you can see that the sum is 100% right here. You are presented with the weekly returns for all of those companies, or all of those 4 companies, including the Nairobi All Share Index. Now, you are required to calculate the weekly returns for each of the individual stocks and the Nairobi All Share Index, calculate the wage portfolio, the average portfolio return for the historical period. You're told to calculate the standard deviation for each of the individual stocks and the Nairobi All Share Index. Then you're told to calculate the standard deviation for the portfolio returns to assess its risk, and to calculate the beta each individual stock of the portfolio, which measures its sensitivity to the market movements. And you can see these are 20 marks. This is 20 marks question. So the way I've decided to arrange the information is to arrange it as you can see on the right of your screen over here, to calculate the weekly returns for each of the individual stocks of the Nairobi All Share Index. So we just pick average, not average A. You can see the average right over here, and the average of what? We want to pick the average for Z-Term Kenya, to pick the average values right here. Up to there, close the brackets, then you enter. So we're saying that the average return should be negative 0.2%. Let's put it to maybe say 2 decimal places. Like that. 2 decimal places is up to there. And if we were to drag it moving towards the right, we wouldn't be wrong, because we're saying that it picks the average for car assemblers. You can see car assemblers, it picks it right there. So that's what they're saying, the average, the weekly returns is given to us right there. Escape. We move ahead and answer part B of the question. You're told to calculate the average portfolio return over the historical period. We have been given the portfolio composition, and the portfolio composition can be linked with this top part right here. The portfolio composition is there. Enter. And we link it with all of them towards the right, Control R, like that, so that you can be able to pick the portfolio composition. Remember, we have computed the average weekly returns above here. So we just link it with up above there, and then we drag it, Control R, like that, the same values, excluding the All Share Index. Because this, all of these portfolio composition total to 100%, as you can see down here, we cannot be able to include the All Share Index into our portfolio. How do we get the average portfolio return? Pick plus, we open the brackets, that value times the average weekly return plus that value times that value, close the bracket, the portfolio composition multiplied by the average weekly return, close the bracket, and then we add finally the portfolio composition for Kilimo Bora, and we multiply that with the average weekly returns, like that. Oops, that, close the bracket, and we enter. So I think I didn't put I didn't put open a bracket here. That's why it's giving me those values there. So we open a bracket over here, and then once we close it like that and we decide to enter, it will actually be okay. So we only want it into the 2 decimal places, so we just sort of reduce it like so to 2 decimal places, like that, 0.35%. Now once we've gotten our portfolio return as 0.35%, we can move on to part C. Calculate the standard deviation for each of the individual stocks and the Nairobi All Share Index. That's 4 marks. So average standard deviation would be, we pick STD, stud dev, not P, because we're not picking for the entire population. We want stud dev, standard deviation for the sample. So we double click that, and we can be able to just pick the value for these values here. We highlight this value for Z term. So we highlight it down like that, and it picks to calculate for us the standard deviation for Z term. And we move up over here like this, we can be able to see we already have that given to us there. And if we were to drag it moving towards the right like so, up till All Share Index, it will actually pick the standard deviation. Remember, for example, this one is picking the standard deviation of the sample for the index, for the Nairobi All Share Index right here. Part D, we asked to calculate the standard deviation of the portfolio returns to assess the risk. And we're saying for us to be able to do that, we will need to consider the weights. And the weights would mean that we already have the standard deviation over here compared to us over here, but now we need to factor in the weights. And we're saying it's going to be, we pick that standard deviation times its corresponding weight over here. The corresponding weights were given to us over here. We can use that, or we can even use this portfolio composition right over here. So we close the bracket and we open another one over here so that it can actually pick the values as the way we want them. Then we add the standard deviation over here. I forgot to open the brackets, so we open it right above over here. You can see it on the formula bar here, so we open the brackets there, and then we multiply that with car assemblers corresponding portfolio composition weight. We open the brackets, we pick Ujenzi Bora standard deviation, weekly standard deviation, times the Ujenzi cement over here. Then we close the brackets, plus we pick this value here and we multiply that against that value there. Open the brackets and we close the brackets like that, and we just click enter. So we can be able to put it in form of weights, and we can say it's about 06.02% standard deviation. So standard deviation of the portfolio is given to us there. So we pick the standard deviations of the individual securities and we multiply them by the corresponding weights. Then finally, we are asked to calculate the beta for each individual stock in the portfolio, which measures its sensitivity to market movements. The beta is given by covariance of the market and stock, so you can put it like so, covariance of the market and the stock. Then we divide that against the variance of the market, like that. And that's what we're saying we're going to do. Covariance of the market and stock, or covariance of the market. So we pick covar S, because we're looking at a sample, covariance, and we open it up right over here. Covariance of what? Covariance of the market. This is the market over here, so we highlight that part. Covariance of the market, and on the second array here we put the stock itself over here, bearing in mind like that, covariance of the market and stock like that, and you can see what we've done, covariance of the market and stock. So we can lock the one for the market, so we are saying this one for G is one that you can be able to decide to lock, F4 and F4. Why are we locking it? Because we want to ensure that the covariance of the market remains like that. And then we do what? We divide now, divide by, you can see the variance like this. We divide against variance, or we just put it like that, variance of the market. But now, before we do the variance like that, we can say okay like that, because that's just the covariance like that, because you can see from the formula by just the covariance. Then we continue and say divided by the variance, not var p but var s, sample, variance of the market, based by this variance of the market. So we pick the variance of these values here and we lock it. So press F4 like that and we close the brackets like that. There, that's our beta, 0.0932. And if you are to drag it moving towards the right, let's just confirm. Covariance, remember we have locked, that's the purpose of locking. This one, covariance of the market. Look, this one has moved from initially Z term to now car assemblies. You can check the previous one over here, escape, check the previous one, you see it is now currently at Z term here. Now we move on to the second one, it actually picks, but it remains, this one remains, the variance of the market remains, the covariance of the market remains. So we can be able to say that the model is foolproof. Control R. But let's see if we're actually doing this the correct thing. We want to try and prove if we were to pull it towards the right, if you're going to get a beta of 1. You can see we already have beta of 1. Beta of the market is always 1, because it's covariance of the market, it's covariance of the market against the market divided by variance of the market. We always have that value being 1 there. And so with that, ladies and gentlemen, we have come to the end of question 23. Thank you for being with Manifested Publishers. We always here for you. Be blessed.
Hi students, welcome to another session of Manifested online classes. So in this session, I want us we continue with the topic number 3, subtopic number 5, financial statement of cooperative societies. And specifically on this session, I want us we look on an illustration question regarding presentation of financial statement of a cooperative society. So I want us we go through the illustration and then we see what was required. So we are told Marura Farmers Cooperative Society deals in marketing of 2 brands of coffee, Safi and Mzuri, on behalf of the members. As per the society's bylaws, the society is allowed to retain 20% of the sales for Safi and Mzuri for operation and pay the balance to the members. The following trial balance was extracted from the books of the society as at 31st of December 2021. We have a trial balance there. We have expenses relating to SAFI, which include marketing expenses, processing materials, processing wages, and then we have expenses relating to Mzuri, which include marketing expenses, processing materials, processing wages. Then we have loans to members. We have dividends from investment, accrued lends, salary provision, appropriation account, revaluation reserve, statutory reserve fund, entrance fee, share capital, members deposit, salary creditors, bank overdraft, interest on loans to members, and then we have traveling expenses for staff, for committee members, bank charges, bank interest, salaries and wages, committee education, committee seating allowance, printing and stationery, general meeting expenses, members education, entertainment, legal fee, cash in hand, Wakulima Bank limited savings, investment in Wakulima Bank limited, receivables from members, receivables from non-members, and then finally we have equipment. Then we have some additional information. Number one, we are told Bora Limited market Safi and Mzuri brand for Marura Limited. On 31st of December 2021, Bora Limited sold Safi and Mzuri brands for $175,000 US and $115,300 US respectively. Bora Limited remitted the above amount to Marura Farmers Wakulima Bank on 15th of January 2022. Marura Farmers Cooperative Society does not maintain a US dollars account in Wakulima Bank. So as far as that information is concerned, it is important to note that this company, which is called Bora Limited, which you are told market Safi and Mzuri brands on behalf of the cooperative society, this is like an agency. This is just like KTDA, which is responsible for marketing and selling tea on behalf of various tea factories. So once KTDA sell tea, it remit now money to the bank account of various tea factories, and then which will be able now to pay their farmers. The same case with this particular Bora Limited is an agency of Marura a cooperative society. It market and do what? Sell those two coffee brand on behalf of that cooperative society. So therefore, once it sell, definitely it remit the money to the bank account of the cooperative society. But because you're given the sales in US dollars and the other figures are given in shillings, we have to translate those particular sales into Kenyan shillings, and automatically we're going to translate them using the exchange rate which was existing at the date the money was sent. I hope you can see we are told the money was sent or was remitted on the bank to the bank account of Marura Farmers Cooperative Society on 15th. So that is the exchange rate we are going to use. So in number 2, we are given the exchange rate for the two currencies, as shown below. So we're given the exchange rate on 31st of December 2021, which was 105 shillings, which was equal to $1 US. And then on 15th of January 2022, $1 was equal to 100 Kenya shillings. Automatically, in this case, I've said when translating the sales for the two coffee brand given in the information number 1, we are going to use the exchange rate on the date the money was remitted to the bank account, that is on 15th of January 2022. Number 3, we are told audit fee of 6 million is to be provided for. Number 4, salaries and wages amounting to 3.2 million had not been paid. These accrued salaries and wages. 5, interest on members' deposit is to be provided at shillings 6.08 million. And then finally, we are told, as per the relevant ministry's regulation, cooperative societies are required to transfer 20% of their net earnings to statutory reserve fund. This is something I mentioned in the first topic or in the first lesson of this particular topic, that cooperative societies are required to 20% of their net profit to a statutory reserve fund. So what are we required as far as that question is concerned? We are required to prepare the following financial statement for Marura cooperative society for the year which ended 31st of December 2021. Number one, Safi Brad marketing account showing the profit and loss. Number two, Mzuri Brad marketing account showing the profit or loss. And part C, statement of profit or loss for the year which ended 31st of December 2021. And finally, statement of financial position. So as far as the first two accounts are required, part A and part B, whereby you're required to prepare the marketing account of the two coffee brands, we're required to prepare those two accounts basically to show the profit or the loss which was realized from selling these two coffee brands. And what we are going to do, we are going to take now the sales, which the sales of the two coffee brand, which is given the additional information number one, and then there is some information which are given in paragraph 1 that this cooperative society is required to retain 20% of the sales of the sales and automatically remit the rest, which is 80% now to the members. So once we take the sales given in number 1 and we determine the amount to be retained, which is 20%, the amount to be paid to the members, which is 80%, then we are going to less now the expenses specifically relating to those two coffee brands. So we start with part A. Part A of that particular question. We are required to prepare a Safi brand marketing account, which is for the year which ended 31st of December 2021, 31st of December 2021. So in this case, we need to have just a single column here, and our figures are in thousands of shillings. So what do we start with here? We start with the sales from this coffee brand, and we are given that information in addition information number 1. We are told the sales from this coffee brand, that is a Safi, it was $175,000 US dollars. 175,000 US dollars, because these sales are in US dollars. So what we need to do, we need to translate these into Kenyan shillings. I've said we're going to use now the exchange rate when the money was remitted out to the bank account of the cooperative society. The money was remitted on 15th of January 2022, in which case now the exchange rate was 100 shillings, which was equivalent to $1 US. So we multiply that with what? With 100, so that we get the final figure here. So let's get the final figure. So this is 175,000 then times 100. So that will give us 17.5 million. Take into account our figures are in thousands of shillings. So that will be recorded there 17,500. Then what you are told is that out of these particular sales from these two coffee brand, now the cooperative society has to retain 20% to cater for the expenses associated with marketing and selling this particular coffee brand, and then 80% of these sales will have to be paid to the members, or basically to be distributed to who? To the members. So therefore, the first thing we need to do, even before we less now the the expenses. So first of all, we have now to deduct amount due to members. Amount due to members, and basically in this case we have said the amount due to members is 80%. Amount due to members. That amount due to members in our case we have said is 80% of these sales, because we are told the cooperative society is supposed to retain what? Supposed to retain 20%. 20%. So what is 80% of 80% of this? 80% of 17,500, which will give us 14,000. So this is the amount now to be paid to the members, meaning that the amount retained by the cooperative society, and which is now 20%, is how much? Is 35. So basically what that means is that this particular amount should be equal to, this amount should be equal to 20% of this. Maybe you can just confirm 20% of 17,500. That should give us 35. That is the amount to be retained by the cooperative society to cater for the expenses associated with marketing and selling this coffee brand. So then what we need to do is basically to go ahead and list now the expenses. We list the expenses. So we are given the expenses, or we're given specific expenses relating to marketing and selling this coffee brand. And those particular expenses are given in the trial balance. I think the first item in the trial balance, we have the expenses associated with marketing and selling a Safi. So we have marketing expenses, which is an amount of 640. We also have processing materials, an amount of 860. And then we have processing wages, which is an amount of 900. Yes, an amount of 900. So wherever you get down there is basically now the profit which this particular cooperative society was able to get from selling this coffee brand. So 35 minus 640 minus 860 minus 900. So this will give us 1100, and basically this is now the profit for the year from selling and marketing this particular coffee brand. So basically that's what the examiner was requiring there, and you can see how many marks were allocated there. The marks allocated were 3. So for recording basically these particular items here, the sales and these particular expenses here, then you had to get those 3 marks. So let's move to part B of that particular question, part B of that question, and we are required to prepare now a marketing account for the other coffee brand, which is Mzuri brand marketing account, which is equally for the year which ended 31st of December 2021. So our figures are in thousands of shillings, and we're following the same format. We start with the sales of this particular coffee brand, and that is given in the additional information number 1, which was 115,300, but this take into account our US dollars. We have to translate that to Kenyan shillings using the exchange rate which existed on the date this money was remitted to the bank account of the cooperative society, and this will give us 11,530,000. So just like what we have done here to this, we need to less the amount due to members, the amount which was supposed to be paid to the members from this particular sales. So we less amount due to members. In this case, we have said the amount due to members is 80% of the sales. 80% of the sales. And then what we get here is the amount retained by the cooperative society to cater for the expenses associated with marketing and selling this particular coffee brand. So 80% of 11,530. Okay, we can take that again. 80% of 11,530. Yes, that will give us 92.24. That is the amount which was due to members. And then how much amount was retained here? We deduct that from 11,530, which will give us 23,06. So this is the amount which was retained by the cooperative society and which was supposed then to cater for the expenses associated with marketing and selling this coffee brand. And we are also given those particular expenses. Those expenses are given in our trial balance there. So what we just need to do is to record them here. To record them here. So we have marketing expenses. Marketing expenses, an amount of 150. And then we have processing materials. Processing materials, an amount of 320. And then we have processing wages. Processing wages, which is an amount of 30. Yes. And then from there, what we do, we get the profit for the year. The profit for the year from this coffee brand. So what do we have here? We have an amount of 2306 minus 150 minus 320 minus 30. That gives us 1806, which is now the profit for the year. Equally, that is what was required as far as part B of that question was concerned. These are some of the items which were marked as far as that part is concerned. And by doing that, you get now your three marks. So let's move to the other part of that particular question, that is part C. But even before we do that, there is something we need to note here, which is very, very important. One, when the year was coming to an end, this particular agency, remember we have said that this cooperative society has an agency which is called what? Board